Breaking news tonight, Treasury Secretary Hank Paulson saying the Fed should have oversight over hedge funds. The Federal Reserve oversight over hedge funds. We're talking about the banking index now, the banking industry, down more than 50% this year. But what does 2009 have to bring? Fred Cannon is the chief equity strategist at KBW. They're out with their 09 outlook for the banks. So just walk us through, skip the bad part. Just go right to the part where it gets better.
Well, that won't be...
Fast forward. Hit the fast forward button.
Right. If we hit the fast forward button, we do think sometime in 09, things well may get better, Steve. I think there's a few things that we need to have happen. One of them is we need to price these toxic assets so that we can actually assess the capital need of the banks. The second is to get more common equity in the banks. That's a critical component. When those things start to take place and we see a bottom in home prices, hopefully this spring, then the banks are going to get very interesting on the equity side.
Yeah, I want the Seinfeld version of this. We had a banking crisis and yada, 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 it was over, and we could invest in the banks. Are there any places right now where you think it's a good place to try to go into the financial system, take advantage of some of these, obviously very low prices, but that the key here to my mind is that the earnings power still exists in the banking in a particular bank?
Two strategies we think investors ought to be looking at. One is buy the bonds. One of the things that TARP has done is while it doesn't protect common equity holders, common shareholders from the losses that are coming in 2009, it does protect the bondholders, and there's some very juicy yields up higher in the capital structure, 10, 15% in some of the cases on banks that have pretty strong capital positions and with TARP can get through.
Yeah, that's a good point. Go ahead.
Second strategy, buy the buyers. One of our analysts calls this buy the vultures, not the meat. Buy the companies who are in a position to pick up and consolidate and create those earnings you're talking about, Steve. Companies like Wells Fargo, PNC, JP Morgan. We think it's a little early for that strategy, though.
When do you implement it? When is it time?
I think it's time when we think the common equity structure of those companies is solid enough to get through that. And I think the problem that investors face in those names right now is there's going to be a lot of scares between now and, say, the middle of the year about are they going to cut their dividends? Are they going to have to raise a lot more common?
Fred, speaking of that the bank outlook there, former Fed Chairman Alan Greenspan saying today in the latest Economist magazine, quote, banks will need much thicker capital cushions than they had before the bust. He is calculating we need another $250 billion. He's saying the government ought to step in and provide on a temporary basis. Your thoughts on that?
Well, I think that's okay in terms of the government providing it, but what the banks really need is not more preferred equity. They need common, because right now the problem that the banks face is they're not protected on the common side. So what we need to do is we need to get private equity in there. We need to create a structure for private equity. So what the government needs to do, in our view, is start doing what TARP was supposed to do, buy troubled assets.
Okay, Fred, excellent report. I got through about half of it. I intend to read the other half. Thank you very much, Fred Cannon.